Good afternoon. Ira Epstein of Linn Associates with your agriculture update, and this update is for Monday, the 2nd of March, 2020 at 1:45 in the afternoon. So we have a market that's mixed in the grains. The beans got a bounce, the meal's gotten a bit of a bounce, but other markets, as you look at them pretty hard, be it the corn, while they were up, wheat was down. It's a very mixed bag. The stock market is everywhere. That's the only word I know how to give you. You've got a 1,400-point range roughly in the Dow. That's right, not 140, 1,400 points. If you're trying to make heads or tails of this, what can I say? There's going to be a G7 communique, I think tomorrow. They're talking of a meeting, be it a video conference, a phone conference, where they're going to get together and try to offer to the marketplace, I'm talking all markets, the idea that the G7 is behind them. Whether interest rates are cut, I don't know. Here's what I do know. There's more and more cases of the COVID-19 still coming out. It appears to me that China's cases have reached, at least in the press, a peak. But now we're seeing it spread in other countries, and that's not good for world trade. End of that discussion. As we look at the energy sector, because it does tie into corn and corn demand and so on, we are still looking at a market that's gotten a good bounce. I had told you the other week, I believe it was, that I thought the market, frankly, in the crude would hold closer to the 40, let's call it $48 range, and it slipped another 5 through there, and I'm talking the WTI. You fell there in the Brent, but they always traded a difference of each other, and right now Brent's got the premium. So as we take a look at soybeans, I do think you're seeing stability right here. What you don't want to do is see this market on a closing basis close under this number, which is 872.5 on the continuation chart. As long as it doesn't, the market's got a chance here to come back into the resistance point. When we go to the daily charts, and this is just the high and low closes, you can see how the market's developed something of a trading range. Let's call it this 910 area down into the 878, 880 area, right in there. When we look at the swing line, you have a lower low. This previous low was 879.25, that's 878.25, and now you got a higher high. So you're not following through one way or the other just yet. The market is fighting a battle at the 18-day average of closes, the red line. Yes, you got under it, you pulled back to it. I don't care if you closed over it today, you did that here too, and you slipped back. The market's not mounting an attack with a trend in any direction. The word trend being made up of the idea of higher highs, higher lows, or lower highs, lower lows that has a lasting meaning. The one break that we had, the lower high, lower low, you went right to the Bollinger Band. See this? Slid through it, came right back, and now you're back over it. So what I do think is you're caught in this range, that the Bollinger Band is almost defining for you, and momentum has turned up. So we have the bias up since the market's over the 18-day average. Momentum looks like it's pointing up, but you're not trending. You got a lower low, higher high. I'd still look for resistance at the upper Bollinger Band and support against the 18-day average at 907. In the meal market, this is called a vertical price rise. The market comes right on down here, stops against that first challenge of the Bollinger Band. You see that? And then goes up. Again, I'm looking for resistance right there. If you don't get it at the first challenge of the upper band, well, then you might go to the 100-day average. And this is where you're at right now. You can see how you're fighting that battle right up in there. You close just over it, but I call it a vertical price rise. What are you going to do? Buy the break? Which break? It didn't break. Found its support right here where I think the pros came out, and I think they came out right here in mass too as it bounced back up if they were long. Soy oil is the weak part of the complex, and it's interesting. I was just reading how Bill Gates had invested in synthetic palm oil. I don't know if you're aware of that. So there's a lot of money going into these synthetics because of where palm oil is grown, what it does to the world climate as you remove land and so on for it. Very fascinating. But you're still in a downtrend here. Resistance back up at 30.49. You'd have to take out 31.05 on the current pattern to break the downtrend, but that would not start an uptrend in the market. You also have an embedded reading. So until you lose this reading, where both the red and the blue lines, they're called the K and the D, when they're both going sideways under 20, you've locked in a bear trend. I think that means that on rallies in this market, the pros are active until it's lost. In the corn market, you came in today. Now, this is always fun to look at. If we look at these numbers right here, one of the numbers is over 20, the other is under it. Got it? Next day, both are under 20. Next day, both are under 20. It takes 3 days to develop an embedded reading, which would have been today. And with the rally, you didn't do it. So you just have an oversold market that was trading under the Bollinger Band, decided to whip around. And even if it takes out this 378 and 3/4, you've got resistance 381 in this market. Plus, it's oversold. I don't know that the bears are going to get too aggressive on an oversold move. Wheat's the same story. You know what I believe? I believe that the combination of the 100-day average and the lower Bollinger Band's often a support zone. This time, that didn't work. Now you're getting a bounce, not a very good one. You're trying to get over the lower Bollinger Band, which you did on the close today, but I see an awful lot of resistance in this area, 540 to 545, the combination of the 100-day and the 18-day average of closes. Sugar market, just let go to the downside. And this has been that seasonal trade that I had mentioned for weeks on end just before my eye operation, and it has kicked in. Now, if it can fall further, the next support zone is the 100-day average, but you are under the Bollinger Band, and you know what I'm going to tell you. You only stay under it about 5% of the time. You now have a couple of closes under it, so I don't know that the pros are going to press it. To me, the canary in the mine is coffee. What do I mean? I realize that we're all hearing the press, and the press is all about how many COVID-19 cases are breaking out in over 60 countries, and it certainly is. But the country where it began, in Shanghai, in Beijing, I'm reading, and they're claiming that over 70% of the workforce is back. As those people walk around, I haven't read that Starbucks has yet reopened their stores, but I'd bet that there's something going on, because this market has now been able to stay over that 18-day average of closes. It's in an uptrend. You've had the higher lows, higher highs. Today it got up finally and hit a resistance point, but you can see that the market had been in that uptrend, getting a little overbought, the 100-day and the upper Bollinger Band resistance. But why is this market rallying if there's no demand for that? And coffee's such a big item for China. I'm just wondering, my own canary in the mine. In the cattle market, still in a collapse stage. All that today's bounce did is it moved the market to the right-hand side of the Bollinger Band. And it had been excessive. If you take a look, on this close you were under it, this close you were under it. Actually, were we? Let's see where we finished this day. Yeah, 2 days in a row under 3, 4, 5. It's rare that you get beyond that. Bonds have done that, and so have notes. Seen both of them stay over the upper Bollinger Band now. I think it's 7 days, including today. It's rare. You're always looking on that 5th day or so, if it happens to go into the 6th, that the market's going to try to make that move the other way. Does that mean you're playing for it to happen? No, no, no. It's part of your strategy of your trade. This is still very much a bear market. What about embedding the reading? Both numbers were under 20 today. Both under 20 the day before and the day before. So it embedded. So this bounce in the market so far to me looks no more like a bear market bounce. As long as the embedded reading, the red line, doesn't close back over 20, I think on the rallies the pros are going to show up on the short side. Hog market, no. The hog market hit the lower Bollinger Band zone and you're just getting a bounce. But it's still very much in a bear trend, but it is oversold. So as we look at these markets, just as we began talking, the Dow was only up 495 or so. Now you're back up another 150. If you're trying to trade this for the Super Tuesday, if you're trying to trade these markets, trying to figure out real fundamentals, come on. You got too much going on right now in between the G7, lack of trade with China, trying to figure out when that's going to pick back up, and all the other events of the virus. It's just a son of a gun to try to catch. Yeah, that too will change. It always does. I want to remind you what we do. We write about all this, and I mean we really write about it. So throughout the trading day, what our company does is we're writing out on the different markets, and they come into your mailbox, and or you can get it through our charting software. But we're giving you, we start on Sunday nights again. In fact, sometimes the staff is writing on a Saturday, but they're going really large hilt come Sunday night, right on through the close of business on Friday, and gives you an idea of what's going on in all these different sectors. And no, you need not get our market information on all of them. You pick the ones you want. If you don't have an account with us or pay for our market research, you can get a free trial to it. But we won't stay on that trial that long. How do you get it? Call my staff. They'll be happy to set you up. Go to our website. Under free trials, we'll put you on for a 2-week trial there. You can click up here. We'll do the same for you. It'll take you right to the page if you're watching me on YouTube. I'm Ira. You have a good day.